Hey, this is Brant from TradeGuild.blogspot.com, and I'm going to do a quick video for you on ascending triangles and how they've been behaving in the market, the bear market recently, which hasn't been very good. I have three charts we're going to take a look at: OPTV, OPTV, BSML, and GPK. And first, let's start with BSML. We've been looking at these ascending triangles as a sort of hedge on our short positions, maybe to capture a little bear market rally that we've all been kind of anticipating, and it just has not come. And I say anticipating, and that's not something we want to do as technicians. Anticipating is really, it's a dangerous habit. As technicians, we want to listen to the market, go with the market flow. Of course, you want to have a little bit of an idea, you want to have a battle plan, but there's a fine line in anticipation and what's productive and healthy and what becomes destructive to your portfolio. Anyway, we've been looking for these kind of nice looking long positions that have the potential to move, and an ascending triangle in a bull market is a fantastic position to be in. And they're reliable, they break out very nice, they have nice moves, they're continuation patterns. And in a bear market, we've been seeing that they've just been falling apart. So I'm going to take a look first at BSML, which I have up on the screen, and we'll see what goes into making an ascending triangle. Basically, you have two lines, two trend lines. You have this line up here, which is your resistance, and that's characterized by supply. And you have this line down here, which is your support. And in an ascending triangle, what makes it an ascending triangle is this rising line of support, or demand, we should say. And basically what you get is a pattern that forms out into an apex like this. As it does, volume diminishes. We can't really see that here, but I'll let me tighten it, or let me go out to a 3-day chart. There it is, the diminishing volume. That's characteristic of an ascending triangle. And basically what we look to happen is, as this apex is formed, price kind of coils up like a spring, and then it breaks out, and usually it will make a move that is equal to the backside of the triangle, more or less. It's a rough way to measure it, but usually works pretty well. And basically in this instance, we have 225 over here to 325, so that's $1. So from the breakout point of 325, we expect to see a move possibly up to about 425, just to get an idea, so we can evaluate our risk to reward. And in this case, though, we didn't even get that far. Let's take a closer look here. We have a move outside of the ascending triangle. Now this is basically a pattern that is washed out now. It's, in my opinion, no good. Maybe it moves down to this 50-day moving average and bounces from there, but I bought an ascending triangle, so if it's not an ascending triangle, my reason for being in the trade is no longer valid. Now, we did have a warning sign here. Over here, we got this head fake and a close above 1 day, and then a move back down into it. This was a warning. This is not something you want to see in an ascending triangle. So what can we say? It fell apart. Let's look at the next one, OPTV. Again, this had thrown us a little warning signal on this day. We had this huge move outside, intraday, outside of that ascending triangle, found support, managed to close back up in it. The next day it kind of said, you know, I'm trying to hang in there, but it closed outside of it. That was our warning. The next day was a clear signal that that pattern was washed up. That one was done. Let's take a look at the next one, GPK, and we still have some people in this, and I know we're anxious to say, you know, is it going to hold? Is it not going to hold? You know, it has closed outside of it. In my opinion, this is probably a washed up triangle as well. We'll see, but in my opinion, it is. So, how do we play these? Because, you know, they are valid chart patterns. They're very productive generally. But I think in a bear market, we have to play these a little bit different. And we're going to take a look at a couple ways to play these. Let me go back to this one. Zoom in for you. so we can see. Here's one way of playing it, and this is what we've kind of been doing right now. Buying in the ascending triangle as close as possible to the level of support. You know, a buy right there makes a lot of sense, because if it falls out of this triangle, that's your risk right there. Whereas if it falls out of the triangle and you bought up here, this is your risk. So good risk reward entry is to buy as close to this ascending support as possible. That's one way to play them, and the disadvantages of playing it that way is opportunity cost. We're locked up in a position basically for, in this case, you know, almost a month and a half or so. So you have opportunity cost, you have beta risk, you know, in market risk. You know, you're sitting in the market with a long position, and it's a bear market. So we have that risk. Oh, excuse me, dog is knocking stuff over here. And there's another way we can play these. We can buy the breakout. So what we would do in this case is we would look for a breakout above this level, which we got here. What we didn't get was the big volume on a breakout. We want to see volume like this on a breakout, or at least like this, you know. So on that kind of a day, we can buy a breakout, and we can hold on, and basically our stop becomes this level, and a move down into the triangle. We're stopped out. Problem with this is we're kind of chasing a little bit. The nice thing about it is it's confirmation. You don't have the risk of sitting in a long position in a bear market. You don't have opportunity cost, but we're kind of chasing. So we don't like that either. The third and last way, and I think the way that's going to be the best to play this, is to buy after we get a breakout around this apex, and then a pullback to support. We buy right here. If it pulls back into the triangle, this is our risk. So we mitigate our risk. We also have confirmation of a breakout, and we don't have the opportunity cost. We don't have the market risk, but we are giving up a little bit of profit. In this circumstance, though, with all these charts failing, I think it's worth giving up the first 10 or 15% of the move to possibly capitalize on you know, a potential dollar move from there. So that is what I think is a decent way to trade these at this point, being that they're breaking down the way they are. Well, I've got your attention. I just want to show you real quick, the new Warden Tchart 2007 has come out, and they've got a new program called Snapsheets. I have one up here which is severely compressed so I could fit it into this video. They usually don't look like this. It's all laid out nice. Basically what I have is in this top window, and you can move these around however you want. I have 4 different browsers. I have Yahoo Finance, the Street Analyst ratings, the Street Earning ratings, and Reuters key developments. And basically, as I change my symbol in the Telechart window, this will automatically change symbols on all these websites. I can pull them up, see whatever I want. I have an overbought, oversold for my portfolio, and or whatever watch list I'm looking at that point. I've got price charts here. I've got fundamental information that is mapped out. Right here we're looking at percentage of shares held by institutions, beta, Warden stochastics, which you can set your own levels. I mean, it's really fantastic. You can put a lot of things. You can come up with your own watch list, your own market indexes. Really, the potential for this program is astounding. I couldn't even do close to justice here in the constraints of time and the constraints of my understanding of it. But if you are a Warden subscriber, like I am, I think you should go to the website if you haven't already and download Snapsheets. It's free with your membership, and it is totally awesome. I really would recommend taking a look at it. That's going to do it for tonight. I will be back with another video. Maybe we'll do one on candlestick charting. Okay, thanks for listening.